Yeah, it's your boy Crypto Blood, and welcome to another episode of My Two Satoshis. Yeah, it is Monday, man, April 22nd, 2019. Shout out to my man Electronic HQ for that Big L. I haven't heard a Big L song request yet. You are the first one. Man, rip Big L, 90s rapper from NY, out of NY. Some say better than Biggie. Well, we'll never know for either of them, actually. So shout out to all the Big L fans out there. Thanks again, Electronic HQ, for that song request for today. What's good, people? Hope you guys are doing well on today, and welcome to another episode. We are going to look at, it's not much news, I'm gonna be honest with you, and I was thinking about that when I was trying to source some good articles to go over with you guys. It's like, man, I'm getting sick of the whole analyst says we're going bull run indicator here. Analyst says we're going back to 1,000. Analysts like, it's just the same articles over and over again in the crypto space right now. I don't know if that means we're at a bottom and we're, kind of coming out of that, or I don't know. But not much to really bring to you guys that piques my interest. I try to bring articles that are more informative, more than superficial kind of headlines and articles. Stuff that you can really take home and mull over and hopefully, helps you make better decisions on your cryptocurrency investments and strategies. But today we are going to be looking at an article out of CoinDesk, and it's about this whole Bakkt securities situation. A lot of the cryptocurrency world is waiting for this Bakkt exchange to open, and they think this is the holy grail and come to Jesus type of moment for cryptocurrencies. Well, this CFTC chairman might have hinted at what's holding back Bakkt's Bitcoin futures operation. So we're going to take a look at that article. Thought that was interesting. Let's see what he has to say about that. Second article is about Vitalik Buterin and his proposal of doubling staking rewards. We're going to take a look at the actual article out of Trust Nodes about that. And the quick review article for today was just something that I saw and said, hey, let me make a mention of this because I was talking about mining the other day in the video. Well, it looks like the current Bitcoin prices are making mining more profitable again, I should say. So I'll do a kind of quick review of that article here in a second. Let's first take a look at that market cap. We are currently at 180 billion, back at the 180 mark. Bitcoin's dominance is at 52.79%. And if I click on this chart, let's take a look. I like to look at things from a visual standpoint. We had a dip the other day, and it looks like we're trying to get back up there again. So, ultimately, I will have to say we are still in a trajectory upwards. That is good news for the bulls. That is definitely good news for the bulls. If we break this area, this line, we're definitely in trouble, and we'll probably be heading lower. But until then, it's looking kind of good there. And I can actually draw a line this way as well. Let's try to draw a little bit better. Draw a line like that. So, maybe in the next day we should figure out what we're going to do here, people. I'm just technically looking at it from a market cap perspective. We know that the cryptocurrency's market cap tracks closely to what Bitcoin is doing price-wise as well. So you can normally derive somewhat of the same trend for the market cap as you do for Bitcoin, or vice versa. Let's go ahead and take a look at that first article, the quick review out of News BTC. I'll leave a link for you, but essentially this article is just talking about this guy Alex Kruger. Seems as though he's done the calculations, and it looks like we are back above where mining is profitable. I told you guys I had mining contracts set out last year, early last year, 2018, that ended up tanking, and I lost a lot of money with that. It looks like because the difficulty rate has dropped as well, and the price has kind of bumped up a little bit here in the last month or so, mining seems to be slightly profitable. It looks like he's saying that operational break even for efficient mining operations is currently around 35.50 Bitcoin. I don't know, the electricity is going to definitely play a big part, and even those prices are not constant. So, but according to his statistics and numbers, miners in China at least are making more than $2,000 in profits after mining 1 Bitcoin. You guys out there, any of you mining Bitcoin still? And that's without pool fees, but I'm not too sure about that. I'm not mining Bitcoin. In the comments below, let me know if you're mining and if it's profitable for Bitcoin. Also, let me know what other coins you're mining and if those are profitable for you as well. I don't know if you guys knew this, about 80% of Bitcoin's mining comes out of China. So that's not too decentralized at all. We got to work on that for sure. I'm assuming that because China creates most of the chips, that they're the closest to it. The price per hardware unit is probably the lowest. Hence, that's why China is the predominant mining country for Bitcoin. So you guys, let me know again in the comments below about what coins you are mining. If you are mining Bitcoin, is it profitable for you? Let's take a look at that first article though, out of Trust Nodes. It's about Vitalik Buterin proposing doubling staking rewards. It says here Vitalik Buterin, Ethereum's inventor, has suggested an increase in rewards for stakers from circa 2.5% to nearly 6%, assuming 10 million ETH is staked, Buterin said. An issuance increase is proposed based on community feedback, along with an agreement to set the base reward quotient based on a preset max issuance bound once all protocol details are finalized. So here's the proof of stake proposed rewards as of this month. That's what they're proposing. The article goes on to say here, if we get significantly less than 2 to the 25th power ETH at stake, then doubling the base inflation wouldn't be unreasonable. Coinbase is known to have in its custody about 1 million ETH. Once proof of stake goes live, potentially this autumn or winter, it is probable Coinbase will offer their customers the opportunity to stake, like they just did with another coin. I can't remember the name right now, what coin they're allowing to stake, but it actually caught me off guard that they're allowing their customers to do that. It goes on to say Binance likewise has in its custody about 1 million ETH, while Poloniex, which for some time was the main ETH exchange, has about 2 million ETH. Buterin has stated that Ethereum Foundation might stake, adding other potential big holders and subtracting the fact not at all exchange customers will stake. Achieving 5 million seems easy, 10 million is probable. Beyond that, it might be difficult to get more people to lock their ETH up. This isn't, however, the article says, much of a way of knowing. ICOs, for example, hold about 3 million ETH, yet the more stake, the less the returns. In addition, there is competition from other Ethereum-based projects that provide returns for locking ETH, but staking might be more secure because if there is a protocol level bug, it is probable the network would fork. For a smart contract bug, it might not fork unless the bug is at the protocol level. The opportunity cost, however, is a consideration for this very volatile asset, thus only long-term hodlers would stake, with long-term here being perhaps a year or two. The reduction in rewards, they say, as the amount of stake increases, should lead to some balance, which may fluctuate with more at stake during accumulation periods and perhaps less during high-speed price rises, although it may be the opposite due to the market delusion effect. The article kind of finishes up by saying there is much estimation going on here, however, but the circa 2% inflationary rate, while POW is running with it then not far off from zero once it is removed, has been suggested for some time. That means that Ethereum may see a halving this autumn to then be followed by BCH's halving and then Bitcoin's. I know it was a little bit on the technical side, but essentially I just wanted to let you guys know what was going on with Ethereum and their whole staking rewards with the POS. You know, if you guys don't know, they are moving from POW, proof of work, to proof of stake, which in my opinion, for a smart contract platform is definitely the way to go, to have a proof of stake, or in the case of with EOS and Tron, delegated proof of stake, which was actually developed by the EOS team or Dan Lammer, the CTO of Block One. Delegated proof of stake is even better. But any proof of stake algorithm I think is better than a proof of work for a smart contract blockchain. So I just wanted to give you guys an update on that. Second article that we're going to look at in detail is out of CoinDesk, and it is about the CFTC chairman hinting at what's holding back Bakkt's Bitcoin futures. The question has been posed repeatedly since last summer when ICE, the Intercontinental Exchange, parent company of the New York Stock Exchange, first revealed its grand vision for a Bitcoin futures platform that would help take the cryptocurrency to the next level of mass acceptance. Bakkt has postponed its launch date twice now, including an indefinite delay at the end of 2018. They did another delay in 2019. I told you guys then that we would not see Bakkt launch in 2019. I still don't see that happening. There are a lot of things behind the scenes that, to me, the government, whether it's SEC or CFTC, have not really given clear guidance on. And the reason they keep delaying is the same reason they would delay or deny the Bakkt exchange, in my opinion. So it goes on to say here, it's widely known that Bakkt's holdup is regulatory in nature rather than technical, but the specific reasons for the delay has been hazy, the subject of rumor and speculation in crypto legal circles and anonymously sourced news articles. This much is clear. Bakkt needs the Commodity Futures Trading Commission to provide a final green light before it can launch. In a blog post, Bakkt CEO said the exchange is working with the regulator but offered little in the way of detail. The CFTC, for its part, has kept quiet about Bakkt as well, so it's hard to tell where in the process the agency is. However, CoinDesk recently sat down with CFTC Chairman Jay Christopher, who became a hero to the crypto community after advocating for a do-no-harm approach to regulating the space before Congress in early 2018. While he wouldn't discuss any specific proposals or companies being reviewed, Jay Christopher spoke in very general terms about the regulatory issues facing new crypto products, offering insight on how the 45-year-old agency is approaching futures as just one example. And if you read in between the lines, his comments offer some clues about the snags Bakkt has hit. Describing the broad contours of U.S. derivatives regulation, Christopher J. used the language of the community, which has nicknamed him Crypto Dad. In the world of crypto, everything's based on certain protocols. Well, the law is also a protocol. We work on a really old protocol. In our case, it's over 80 years old, he said, referring to the Commodity Exchange Act of 1936. It's thousands of pages of regulations and is very detailed. Under this protocol, which also includes state and federal antecedents and began to take form as far back as the 1860s, regulation of derivatives were bifurcated between the state and federal governments, he explained. He says here the deal that was struck, there'd be federal oversight of an exchange, derivatives products, certain intermediaries, and the clearinghouses, but the entities that actually held custody of financial instruments like cash were usually regulated as banks or trusts under state law or a national charter. These custodians, which also include commodity warehouses regulated by state-level agencies or by the U.S. Department of Agriculture, hold the underlying assets and deliver them to customers when their futures contracts expire. Even when we have a CFTC regulated clearinghouse, the clearinghouse uses state-regulated custodians or a nationally chartered OCC regulated bank for the actual holding of the funds and securities. With that said, firms can choose to hold their assets within the clearinghouses themselves. Today, he says, one of the challenges his agency faces comes from evaluating how futures exchanges might store cryptocurrencies. This comes into play when contracts are physically settled, meaning buyers are delivered the actual commodity at expiration. While the Bitcoin futures launched in 2017 by a CME and CBOE were settled in cash, amounting to side bets on the cryptocurrency dollar price, Bakkt, along with startups IrisX, SeedCX, and LedgerX, aspire to list derivatives contracts settled in real Bitcoin. Our statute, he says, allows us to regulate the new physically settled cryptocurrencies, but it contemplates an entity using a regulated trust or bank for custody of customer funds, unless they opt to hold the assets in the clearinghouse. In that light, it starts to make sense, the article says, why the CFTC has been slow to approve Bakkt. According to its past announcements, the exchange initially planned to custody Bitcoin through its own digital warehouse, since ICE is not a bank or state-regulated custodian. This would have required an exemption to the rules described by Jay Christopher. However, Bloomberg reported last Thursday that Bakkt is now seeking a license from the New York State, presumably for a trust company so it can handle custody. All this, it's just crazy because we're now folding what cryptocurrencies and Bitcoin was intended to do, which was be totally separate from the traditional markets. Now it's being folded back into the heavy regulated, overly inefficient, expensive, all that slow network and framework. And so it just makes no sense. It's pointless in my opinion. It's all pointless. And if the people that were trying to do this only understood what the actual concept of Bitcoin was and the goal of it, then they may not even be trying to do all of this. Or maybe they would, because they're coming from the old paradigm. So that's all they know. What do you guys think about this? It looks like they've got to go through a few more hoops to actually get this thing launched. I'm thinking it's going to take another year or so. Despite, it says, all the setbacks, Bakkt has continued to build up its platform, naming a board of directors, hiring execs, recruiting developers and managers, and making acquisitions, and getting 20 million to 25 million budget from its parent company. Still in all, whether and when Bakkt launches will depend on the CFTC and will require every last detail to match. We'll see what happens with that. But I just wanted to read that to let you guys know where Bakkt possibly could be stuck. What process, where in the whole process of getting this thing approved, where they probably are at this point. Again, I'm totally against all of this bull crap. It's just not healthy for newcomers to even come in this way. Like, own your own Bitcoin. It's easy. That's the whole point of it. Be your own bank. All of that. That was the goal initially, and we're getting every day we're getting further and further away from the prime reason for Bitcoin in itself. It's just crazy, people. Again, you guys let me know your thoughts about all of these articles here. The mining being profitable now in Bitcoin. You know, my thing is with mining, it's crazy because when you see these headlines, that just makes more people jump on the network to mine. Hence, it bumps up the difficulty rate, which the price of Bitcoin has to continue to rise in order to have that margin, that delta between the difficulty rate and the price of Bitcoin. So it's going to be interesting to see if it can sustain this profitability period, because it has to move up in price if more people jump on the network to mine Bitcoin. And also, let me know your thoughts again about the Vitalik Buterin proposal for doubling stake awards. And lastly, the Bakkt situation. Again, I told you, I don't think they're going to be launching anytime soon. But that's pretty much it for today. Again, shout out to my man Electronic HQ for that big L for today. Haven't heard big L in many, many years now. So I appreciate that one. It's your boy Crypto Blood. Make sure you guys like, share, and subscribe. Make sure you do click that thumbs up to support the channel. And I'm out of here, people. Holla!